Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our head of research, Jasper Lawler, as per usual, to discuss what's next for stocks after this week's crash, what higher volatility means for trading strategies, the rise in inflation expectations before data is released this week, as well as an outlook on the dollar and commodities. Before we get to that though, let's run through some corporate results and economic data. We've earnings from Acacia Mining and First Data Corp on Monday. It's TUI Travel, Overstock.com, PepsiCo and Under Armour on Tuesday. Galliford Try, Credit Agricole, Credit Suisse, WorldPay, Shire, TripAdvisor and Cisco all on Wednesday. Airbus, Nestlé, Vivendi on Thursday. Then we finish the week with Alliance, Danone, Renault, Deere, Kraft Heinz and Coca-Cola on Friday. And moving on to the economic calendar, it's a slow start on Monday, but on Tuesday we have UK retail sales and UK inflation. On Wednesday, there's Japanese GDP, Eurozone GDP and Eurozone industrial production, then US retail sales and US CPI. On Thursday, Australian unemployment and US industrial production. Then on Friday, there isn't much data of note, but it is Chinese New Year. So, Jasper, I've been dying to catch up with you because we've had the busiest week I think I've ever experienced on the dealing desk. How has it been down your end?
Yeah, pretty busy for me too, Kelly. A lot of questions being answered about what on earth's going on. Obviously, volatility has just skyrocketed. And we had the big sell-off early in the week, then the big sell-off again later in the week. So I think the first element was this sort of technical jump in volatility, all these investors and traders betting on low volatility with these ETNs. These ETNs just collapsed in value. That spiked across into the Dow and the S&P, and that's just why we dropped so much. Obviously the biggest one-day drop ever. But then why did we get a sell-off again later in the week? Well, a couple of things in my book. One being that investors are just definitely turning a bit more defensive now. Yeah. Obviously, it's a potential dip buying opportunity. With 10% down, it's a correction. But nonetheless, just the velocity of the fall. Naturally, you're going to buy a few more defensive companies. You're going to probably take some profits on those big momentum stocks. So it's a jostle now. You know, there's the people that are buying the dip versus those that are just, taking some money off the table in anticipation of a bigger drop. So quite who wins out, I don't have a crystal ball. But I do suspect that just when we're looking at the Dow, we haven't quite hit that 200-day moving average yet. And that's always just a good benchmark for a reversion to the mean, which we haven't had for a long time. So to me, it seems like we can probably just fall a little bit further from here. But there can be some massive, volatility, a big range, which is great for trading, for especially day trading in the time being. Yeah.
So what does this volatility mean for trading going forward?
Well, I think one thing is that, if you have a trading strategy with, very simply put, like a very tight stop loss, you're going to have to widen that a bit. If you're just buying dips of, 0.3%, and anticipating another move to new highs, that clearly isn't going to work in this environment. You're going to have to accept bigger swings. It's probably less of a more directional trend. There's going to be larger pullbacks and more probably, especially for the time being, while we try and flush out what's happening here at the moment, is it's probably going to be slightly more range tradey. A wide range is how I'd imagine things kind of develop for the time being. Obviously, it could just be another couple of 1,000-point plunges, but I would imagine we're kind of ranging around at the moment. So that, obviously, that is a different strategy in itself. When you're looking at US stocks, a very tight volatility trend versus a high vol range. So, you've got to adapt what you're doing.
Yeah, okay. And one of the central concerns was inflation, and we have data coming out in inflation as well coming up this week.
Yeah, pretty apt. So obviously we had the Bank of England meeting where they highlighted that inflation's still well above target, so they're going to have to raise rates, it seems, a little bit faster than they previously anticipated. So that's the UK angle and things. We do have UK CPI next week, so we'll have to see whether the data kind of backs up the Bank of England's kind of forecasts here. I suspect probably it's going to confirm it because we had a decent run in oil prices, so in the short term you would expect to see that reflected in general price levels. And obviously the sell-off, it seems like it's been pretty US-centric so far. Obviously we have followed suit, more so in Asia than in Europe. Europe's been a bit more balanced. So the fact that we've got the US inflation, where those inflation concerns really emanated from through those moves in treasury yields and things, that US CPI data, I think, is going to be pretty closely watched. But I don't imagine there's actually going to be any real move in the CPI that confirms or denies, really. I think people are looking quite further out into the future and just feeling that inflation is creeping back and that central banks are pulling back their stimulus as a result.
Okay. And the Dow has been getting all the attention, but you're saying something about the dollar.
Yeah, so, I mean, obviously, you know, particularly if you're an FX trader, you're looking at this movement in indices, but, you know, maybe not able to fully take advantage. But I think probably what we are starting to see now is that actually maybe there is a bit of a bottoming process taking place in the dollar. Just not necessarily long term, but for the short term, obviously when there is a flight to safety, typically, yes, the yen will benefit. So dollar yen's not quite so clear, but the dollar is the sort of natural, you know, as the reserve currency of the world, the natural haven. And we saw it in 2008 when there was the financial crisis. The dollar just gained massively against most currencies. And most currencies haven't recouped those losses that they incurred in 2008 yet. So if we do see a bigger sell-off in stocks, that's going to exacerbate, to me, the demand for the dollar. And we just hit 125 in the euro. The pound's been struggling a bit at 140, so maybe there's just some scope for a bit of a top in some of these currencies.
Okay, interesting. Great. And lastly, we talked about profit taking in oil last week. It seems like it's still happening.
Yeah, exactly. I think that profit taking is now almost turned into just a general sell-off. I mean, obviously, oil kind of is one of those things that will get caught up in general market sentiment. So, you know, everyone's taking risk. You will buy oil. When you're taking risk off the table, you're going to sell oil. So I think that goes some way to explain it, but it's been a bit of a tour de force of reasons, because we have had inventory build up in the US as well. So there's that fundamental with the oil market, bit like the stock market in many ways. Speculation in oil reached record levels, and so the market was a bit overbought, and then we've seen some fundamentals and the overall risk environment sort of give a few reasons to think actually we've got a bit more of a decline to come here in oil.
Okay, thank you, Jasper, and thank you very much for watching. If you wish to get these videos as soon as they're released, please follow LCG on social media.